When I first started trading, I had no idea how much the news can impact the market. I kept getting trapped during news releases again and again. 1,000 times, price suddenly moved, hit my stop loss, and left me wondering what just happened. After some while, I started asking myself, why does the price move so suddenly? Why does it spike out of nowhere? Eventually, I discovered the truth. Scheduled economic releases and unexpected news were the main reasons behind these sudden moves. Then, a bigger question came to my mind. How can I protect myself from these movements? And more importantly, how can I actually use them to make more money? In today's video, we are going to dive into this topic together. There are some kind of news we simply can't do anything about them, like a sudden quote from the US president, an unscheduled tweet from the Fed chair, or any unexpected announcement that shock the market. You might ask, how can we avoid to blow our account or get a margin call when this happens? The answer is simple: proper risk management. If a breaking news pushes Bitcoin from 90K to 99K, that's a 10% movement. So, with a 1 to 10 risk to reward ratio and just a bit of bad luck, you can blow your entire account. That's why you must research your symbol and understand its volatility and choose your risk parameters carefully. But when it comes to scheduled news, you actually have options. You can choose to stop trading during that period, or you can trade especially during that time, but with a solid strategy. Let's break this down more clearly. There are three major approaches traders follow when it comes to the news. First is the fundamental first approach. In this group, they think that you should always follow the news carefully. Uh, for them, especially swing traders and position traders, news is a prerequisite for trading. They say you need to understand the overall sentiment and then trade based on them. The second approach is pure price action. This group says news doesn't matter at all. Their belief is simple: price is influenced by everything right now, so the chart already shows the truth. They even argue that sometimes positive news leads to a negative move and vice versa. So following news doesn't help at all. The third approach is a balanced approach: 80% price and 20% news. This group says price action is 80% of trading, but news still makes up to 20%. You don't need to trade based on news, but you should be aware of major upcoming events. Why? Because knowing the probability helps you to align with the market direction with your trading goals. This is the approach I personally agree with, combined with a strong risk management. Look at the Euro CHF candle in 2015. In a single day, price lost 30% of its value. No prediction or no analysis could prevent that. Even with a 1 2 3 risk to reward setup, you could be completely wiped out. So, what we can do? We can protect ourselves with stop losses, risking smart percentage of our assets, avoiding oversized positions, and understanding that sometimes the market behavior is irrationally. There are successful traders in all three groups, but the difference between the 2% successful traders and the 98% who fail comes down to one thing: risk management. Now, I want to introduce our tools in MetaTrader 5. We have an all in one trade assistant, a complete toolkit that will provide everything you need for your risk management. Includes a powerful trading panel, prop firm assistant, news calendar, market analysis, time management tools, and alerts and notifications, or even trading based on time. You can get it now on MQ5 website with an affordable price. We also offer many indicators and tools and experts to help you trade more effectively. If you don't know how to purchase from MQ5, you can watch the link above. As a day trader, I personally don't trade during the measure news time. I want to fish with a sea full of fish without big waves. In trading terms, the big waves are the news driven market spikes, and the sea full of fish is the liquidity in the London and New York sessions. This is the core message I wanted to share with you in this video. At the end of the day, you can't control the news, but you can control how you can react to it. The market has always surprises like volatility and uncertainty, but with the right mindset and strong risk management, these events don't have to destroy your account. In fact, they can become opportunities. Whether you choose to avoid the news, trade with it, or simply stay aware of it, what truly matters is having a plan and protecting your capital. Remember, your longevity in the market is more important than any single trade. Trade smart, stay disciplined, and keep your risk in check. And if you want tools that simplify this process, don't forget to check out our products on MQ5. Thanks for watching, and I'll see you in the next video.